Welcome to the Always On podcast. I'm your host, Duncan MacPherson. And on this podcast, our objective is to keep empowering our audience, which are very high caliber fee for service professionals, to always be working on their business and on themselves. On today's podcast, I had a very good conversation with Jimmy Lee. Jimmy is the founder and CEO of the Wealth Consulting Group. WCG is a hybrid RIA consisting of 43 branch locations. He has 123 advisors now. They, as a team, manage over $8.5 billion in aid. It's a very interesting wealth management firm that's very innovative, a lot of profile. And one of the things I love is that Jimmy, while he is the CEO of this growing entity, remains a financial advisor to a meaningful group of clients. So in this episode, we talked about the advisor of the future, what's coming in the next 5 to 10 years and what the unmet needs and areas of refinement advisors can be making to achieve professional contrast and maximize the value of their life's work and everything else. We talked about growing, teaming, scaling, and exiting. And I hope you enjoy it. And if you do, just like and share and tell your colleagues. If you have any ideas, suggestions for topics you'd like to hear down the road, just let us know. Thanks for listening. So at Pareto Systems, we currently have just a little over 200 active coaching engagements with very high caliber financial professional teams. And everybody is in one of these four categories. They're either growing organically through pure introductions from advocates and strategic partners. They're teaming, which means they're adding depth and breadth to their org chart and their solution set. Scaling, which means their proof of concept of their organic business is now ready to be put in the hands of somebody else. They go out and buy a business or attract other advisors to adopt and draft in behind the process. So growing, teaming, scaling, and then of course, exiting, because every business is built to be sold. And we say to advisors that every investment of effort you make working on your business drives that enterprise value. So I'm telling you this because it is very rare to have a guest on the Always On podcast that has profound insights at all four of those drivers. You might be familiar with Jimmy Lee. He's very well recognized in the space. He's the founder and CEO of the Wealth Consulting Group, who I know very well as a firm, a great community, 123 advisors, well in excess of $8 billion in aid. But of all the things I love about Jimmy, he still has his finger on the retail pulse, which means he's still, as he's running this business, managing clients and managing their assets, which gives him incredible credibility. So Jimmy, first of all, thanks for carving out some time and being here. I'm really looking forward to this conversation.
Thanks, Duncan. And you're one of my favorite people. So I appreciate you inviting me on and look forward to our talk here.
Wow. I mean, likewise, I still have vivid memories of the first time you and I met. And I just felt that we were so simpatico in terms of our worldview and the concept of an advisor. The best way for an advisor to take impeccable care of their clients is to take impeccable care of themselves, personally, professionally, in all manners. So the first thing I want to get into, Jimmy, is just talk about the advisor of the future. And I'd love your perspective on where the industry is going and what an advisor needs to do to thrive and be in the category of the best, not the rest. So let's just start there.
That's great. And I love talking to you about this because you work with so many advisors out there and many of the highest performing advisor teams in the industry. So it's great to chat with you about it because it's great to ask questions about what those teams and advisors are doing. And in my view, I think that if you take a look at the entire industry as a whole, I would still say that, it's like the Pareto system. 80% of us in the industry are still getting by, putting together a portfolio for a client, because of course that's how most of us earn our living, is on an asset management fee. And we provide regular updates. And some advisors, or a lot of them, will do financial planning, maybe upfront, maybe to acquire that client. But I don't think that in general, I don't think that the average advisor does an amazing job of formally keeping up with the client's financial plans on an ongoing basis in a very proactive way, where the client feels that it's effortless. I still think that we're too stuck in the commoditized world of, asset management and performance. And that's why I think you and I resonate so well together in terms of our philosophy around what we should be doing as advisors. And so what does the advisor of the future look like to me? It's really been the same, thing that I've been chasing for 25 years. It's just so difficult to implement, which is I believe that we have to deliver an extremely comprehensive service that goes beyond the commoditized just portfolio management and, be really good at doing financial planning on a proactive basis, but also incorporating other aspects of our clients' financial lives. And in my opinion, I think that the financial advisor is going to be the lead in terms of who's controlling the tax planning with a lot of our clients going forward versus it's always been the CPA that's had, the driver's seat when it came to credibility, especially working with business owners, because they might be interacting with the CPA a lot more often if you're a business owner. But many of us, in the industry that are working with the typical millionaire next door clients that a lot of financial advisors love, the $1 to $5 million accounts, those type of individuals that are getting close to retirement or retired and they don't own a business. I think that part of the tax prep, tax planning market is going to be disrupted. I think it's getting disrupted right now with AI. And I think the financial advisor is going to be a big part of doing more proactive planning because, as we all know, CPAs or tax professionals just don't do a very good job of being proactive with tax planning. It's always in arrears and it's too late. So I think we are going to be in that driver's seat with AI-driven tax prep software that we're seeing today. And then along with that, it's going to be trusts and estate planning and asset protection planning. There are a handful of providers out there that are also AI, I think, integrated that, do this for the client. And we as a financial advisor will be the conduit for that and the lead for that. We have just ordered wealth.com as our choice for that, but that's part of it. And then we're also using, I'll mention the company called April, which is for the tax prep part of it. So we're doing that. And I think that just, those two services alone are going to be part of what I think an advisor is going to need to provide in the future if they want that client, that even the millionaire next door client, that's not the sophisticated business owner with tens of millions of dollars. I think they'll also appreciate, having this all packaged in. And so I think that this comprehensive wealth planning, wealth services, and your 7 pillars, Duncan, and why I resonated so much with your coaching as we've been marketing being a personal CFO to our clients for so long, I think it's going to become table stakes. And it's no longer going to be, just talking about it. I mean, there are firms right now, as you know, that are offering this today. And I think in the future, as we get more consolidation in this industry and more, smaller practices of 100 to $250 million advisors move into these companies that provide more services, I think it's going to become table stakes.
Yeah, totally agree. And, it's interesting when we do a consultation with a team and they're mindful of plateau avoidance and trying to find that next gear, we're trying to help them understand their unmet needs and their blind spots. And it generally starts with these 2 questions. I ask them, I say, what do you manage? And what do your clients trust? And as you can imagine, most advisors fixate on technical ability, core competency. What do you manage? Well, I manage money. And I just keep reminding them that you manage a business and you manage people. You manage how people perceive you and how they describe you. And you manage a business that creates a consistent client experience. And those 2 are proprietary. Managing money is so commoditized. It's important. I'll never trivialize it. But I just want them to expand their thinking around what they manage because that impacts what it is a client trusts. I want the client not just to trust the advisor and their, qualities and skills and intentions. I want the clients to have as much appreciation for the rest of the people on the team, for the practice and the client experience it creates, and the process. And this is where they start to sort of realize, okay, this is how I put distance between myself and the pack who are locked in the status quo. Now, you talked about the 7 pillars. You remember, when was that? You and I talked about this probably 5 or 6 years ago, because you were right there with the iceberg, and how, a typical advisor will have clients that know what they know what they see, but there's so much more there. But there's this disconnect for the advisor to remove the mystery and have a client understand and appreciate their value fully and completely. So I'd love your perspective, first of all, on how you do that with your retail clients, because you have a substantial business in and of itself, but also how you work with advisors and how to, enable them to have better positioning so they're fully appreciated. So why don't you run with that?
Yeah, I'd love to talk about that. I mean, I've been a financial advisor now, geez, I'm aging myself, but 30 years. And, it's been very difficult to build a team around me that can, help us compete at a high level for those valued relationships that we're all trying to get, you know? So I think the firm, and you mentioned the Wealth Consulting Group, really what the firm has been this creation of what I've always thought I needed as an independent financial advisor, but really couldn't afford, whether it was monetarily or resource wise, to build it. And so this firm that's been built really has been there to build this team around me, so that instead of me having to foot the bill for building an ensemble cast of CFPs, CFAs, insurance specialists, those types of people, tax people, trust experts, the firm now supports that for us. And that's what it does for a lot of the advisors affiliated with our firm in their own independent practices. And so we have a lot of advisors that have their own brands that we support. And while we may be, responsible for supervision, for compliance, we're really a vendor to them. And that's our platform that we have for independent advisors. And then we have more and more advisors that are wanting to use our brand, which we allow to do. And here in the future, Duncan, we're going to be opening up a new channel for these independent advisors that affiliate with us to potentially be a partner of the firm, and then also provide them a smooth succession plan for their business and helping them maximize their enterprise value, which you've talked about a lot. What do you do as an advisor to increase your enterprise value and get ready for a succession down the road? Well, we think we've built now a system in-house to allow an advisor to do that without having, a lot of disruption within their business when that happens. And so backing up, to how we've been able to do that, it's really been able to put resources around, me as a financial advisor, using the firm that I was also able to build as a CEO and invest into. And I was able to take a lot of the money and earnings from my own personal practice while we were starting the RIA and the platform, and to reinvest the, revenues and profits of the platform back into the business to grow that. And that's really what we have today at the Wealth Consulting Group now, with 43 branches, 120 plus advisors, 8.8 billion of assets under, advisement administration as of the end of May. And backing up to this industry that we're in, I've been in it for so long, and, watching movies like Wall Street when I was just a young man, I think there was a golden era for stock brokerage business and investment business back then. But truly, the golden era, I believe, for financial advisors is right now. If you think about it, I mean, some of the things that our industry was famous for and what sounded sexy back in the day was not so great for the clients, right? Where a lot of, the way the system was set up was that the more trades that you were doing, the more commissions you were earning, were not necessarily always in the best interest for the clients, right? So now comes fee-based and SEC and fiduciary. And now we're much more on the same side of the table with our clients, which has been tremendous for our industry, for both advisors and especially for the clients that we serve. But I think about this is the era, the golden era, really. If you see what's been happening lately with the investment of private equity into our space, and, the interest in our business and the valuations of financial advisors' businesses going up because of what's going on, along with, according to a recent McKinsey study, as you know, by 2034, unless things change, they see that here in the United States, we're going to be short 100,000 advisors that are needed to service all the wealth that's been created in the United States. And so if you're an advisor, I mean, think about the opportunity that we have in front of us with the demographics of our industry and with also the fact that all these surveys that I'm seeing lately, not just at death, you know, of a client will maybe their children and spouses not keep the current advisor, incumbent advisor, but even now that a lot of people say they're open to switching financial advisors. And so I think the good news also is that it looks like the younger generations of inheritors of wealth really want to pay for advice. And this whole argument and concern about margin compression really has not been realized, right? And until robots can figure out how to, stop humans from falling into just regular, human nature, the pitfalls of we as humans and panicking when the, market goes down and the account balances go down and the world's going to end. Until somehow machines are able to help people to stop that, I think our industry is going to continue to grow and flourish.
Okay, I completely agree. I did not hear that number of 100,000 because that's meaningful. I just want to acknowledge something you said, especially that second generation, because many advisors tell me that many of their favorite clients are first generation self-made affluent. It was earned money. It was not found money. And, getting out in front of the money in motion and that going to the next generation and the whole dynamic of preparing heirs. Jimmy, I'll often ask an advisor, say, hey, tell me, what is it you do? Like, what business are you in? And as you can imagine, they'll go right into sort of a data dump of what they actually do. And they have this huge eureka moment when I say, okay, it's not what you do, it's what your value does and how it aligns with what it is a client wants. So then I ask them, I say, what does a client want from you? And it just opens up this conversation. They hit these key points and I say, let's talk about how we align what they want with what you do. Let's create a value proposition out of this exercise. And ultimately what they want is they want navigation. So first of all, kudos on the brand of the firm, the Wealth Consulting Group, because it's right in the name. You're providing this fluid and dynamic consulting. You do that with your clients. Your community of 120 plus advisors are trying to do that. It's not transactional, it's directional, it's panoramic and all encompassing. So let me get to my question here. You and I have never had the same conversation twice. You're always innovating. But I've noticed at all the events that I've been that you've done with your team, you've created a culture of belonging and aspiration. In fact, your purpose statement is making life better. So talk to me about that. Where did that come from, that enlightenment? And does that impact the caliber and the quality of advisor you're attracting? Get into that for me.
Yes, I'm glad you're asking me this because, a lot of this and making life better has been a tagline for us for really the last 2 to 3 years. But a lot of it's come from, trying to answer questions that you pose. Like, what business are you in? Like, what is your purpose? What are you excited about when you wake up? What are your clients excited about when they wake up? What are they scared of when they wake up, right? What are the questions that are not being asked, right? In the advisor-client relationship. And so if you think about it, we think for us, if we can help improve the lives of our clients, our employees that we call team members, our advisors that are our clients and soon to be some of them partners, if we can help them make their lives better, then what other thing can we do? So we're very proud of hoping to do that. Now, how we do that, right? For our advisors, it's real simple. We think we help them give back the most important commodity in this life, which is time. We believe we've built a company that allows our advisors to, number one, encourage them to find out what their genius is, what they're passionate about, what their purpose is, what they love to do, what gives them energy. And we want to build a company that allows advisors to spend 80% of their time in there. So it's fun. So hopefully we can extend people's careers, and we give them back time. Now, some of these advisors may be, running more lifestyle businesses and aren't as interested in growing as some others, but, that's awesome too. And just by the nature of having more time, I think that advisors end up growing regardless whether they want to or not, even if they're in a lifestyle type practice, if they're outsourcing some of the heavy lifting items to a firm like ours. And we're not the only people that do this, we know, but we're really trying hard to keep improving our value proposition so that me as a financial advisor, I can deliver more value to my clients. And I don't have to do all the heavy lifting myself. I don't have to even do all the, thinking myself. And as you know, I mean, I don't think there's any rocket science, right, on what makes an advisor successful versus another advisor that's not as successful when it comes to production or raising assets or whatever. There's not a secret sauce on how to get the next new client and all that kind of thing. And it's not that we're getting new clients necessarily because our performance is so good and it's better than everybody else's. Those are not all the right reasons. We know this. But getting to the best practices and implementing those practices are very challenging for a lot of us, even people that have a lot of resources. And so if we can help with that, then I think that moves the needle. And, it's really about what can we do to try to help create a company that lives beyond all of the, advisors that are associated with us now, probably, which are the founder advisors that will have our businesses succeeded by someone else. And so what do we want to leave behind, right? What's the legacy for our businesses that we don't leave behind? What type of service will our clients get? And in my opinion, I think that what's going on in this industry is that because a lot of the independent advisors that are joining, larger groups, whether they're selling or not, I think the actual service experience and what the clients end up getting in the long run could be better, in terms and more consistent, because there are some institutional resources potentially behind the advisor at that point that's, implementing a lot of these things. And also a lot of these younger advisors that are going to be the generation 2 advisors that take over, they've got a lot more energy, right, than the lifestyle advisor that's in our 50s or 60s or 70s, not working full time anymore, because we have a lot of, income coming in off the fee-based businesses that we have.
There's an interesting symmetry to that because, a financial advisor is ultimately trying to help a client focus on, not on the wind, but the set of the sail. There's so much noise, storms and uncertainty and volatility, a lot of it blown up and embellished and, just fear. So the advisors, that signal to noise ratio, like tune that out, tune this in. But that applies to the advisor too. And that's why I think creating a culture where there's a sense of belonging, like every event that I've gone to that you guys have orchestrated has an energy of belonging where it's not just about production and wallet share and I eat what I kill and let's drive up our numbers. It's like, hey, how are you doing? And let's talk about the total advisor and everything going on in your life. And I think that's huge. And back to your point about time, I had a conversation with a client the other day because he subconsciously kept saying to me, I just don't have time. I can't get to it. And I said, is it possible you're majoring in minor things? Like, I know people that are 10 times as productive as you and they also have more free time than you. So how is that? You both have 24 hours in the day. It's a bit of a lecture. I might have come off a little bit the wrong way, but we ended up landing in the conversation around building sustainable habits. So not getting through the day, getting from the day, as the maxim goes. And I'll just remind everybody, the sustainable habit formation protocol is trigger, pattern, reward. So what's your trigger? First of all, top advisors are self-motivated, number one. Number two, they schedule everything. They're not run by the business. They're not reacting. They schedule things like time to exercise. They schedule time to work on their business. They make it a priority. That's the trigger. So self-motivated and scheduled. The pattern is they understand incrementalism and compounding. We all know how money compounds, but disciplines compound too, as does neglect.
Have you ever felt like you're alone on a desert island? Alone, with your challenges, and wishing you had a group of successful advisors to share ideas with, solve problems together, and push each other to reach bigger outcomes? Well, you don't have to be alone. Hi, I'm Scott Hamilton, a Pareto coach, and I also lead the mastermind groups for Pareto Systems. Our goal to help advisors achieve bigger, better futures faster than they could on their own. Through our mastermind format, what we call collective genius, we bring together successful advisors to share best practices, insights, and solve problems together. Some of our groups also are focused on specific niches, like divorce or M&A. All groups are led by Pareto coaches who've worked with hundreds of top-tier financial advisors. Ready for more? Visit ParetoMastermind.com for details and to check out our upcoming webinars. That's ParetoMastermind.com. Bigger, better, faster.
Now, what's interesting about pattern is that the segue to reward, like what's the point? What's the incentive? You know, Jimmy, my wife does Pilates and she's found another gear of motivation. And part of it is because I realized she told me she wants to hit a milestone of how many classes she's attended. So that becomes the reward that brings it back to the trigger. So I'd like your perspective on time and that whole sustainable habit, because 80% of the productivity, 20% of the activities, like the genius that you're talking about is, okay, what gives you purpose? What is productive? What's the best use of your time? I'd love your thoughts on that.
Yes. And also I'd add, what do you love to do? Right. So, and sometimes I think for a lot of financial advisors, I think we're in an industry that especially those of us that have been independent for a long time, we have some big egos that we have to overcome. So a lot of times our biggest obstacles are ourselves, right? So when it comes to habits and having the discipline to change, right, and grow, I think it's just what you said. I think it's about, a friend of mine says that it's amazing when you look at the long term, the things that you can accomplish, or if you go back 10 years, what you've been able to accomplish, right? And then in the short term, I think we overestimate a lot what we think we can accomplish. But little incremental improvements, 1% better, every single day, week, month, whatever that is, I think just implementing new things that create more efficiency, productivity, new habits, and as we all know, I think every single human has felt this in their life, which is, our health. When you are working out and you're doing the things for your health that you need to do, you're sleeping well, you're exercising, you're moving, you tend to eat better. It's amazing how things compound on itself, right? And so I just think that momentum is important. You can literally start like right now or tomorrow morning and wake up and decide, maybe the person I am, there are some things that I want to change and improve upon, and maybe I can create that new individual. And it's always great, I think, to document this, put it in writing, so it's committed, and then build yourself some routine. So for example, every morning I like to have a little bit of quiet time, where I can do the things I need to do to get my mind straight and then look at the priorities for the day, but start out calm, maybe even throw in a little bit of meditation or something in the morning would be great, I think, for many of us, especially for those of us where our minds are moving very quickly. But then, like you said, have the discipline to have the things in your calendar, right? And stick to that, of the new habits that you want to create, or the disciplines that you need to have in order to change and to grow and to be more successful. I also would encourage people to think about, the balance between their business lives and professional lives and personal lives. And, we all know a lot of people that are very successful looking from the outside, maybe that earn a lot of money, but have miserable personal lives, right? So what good is it to make a lot of money and have a great business and whatever, but when you go home, you're miserable, right? And so I think it's important to check in on that and make sure that we've got the right balance, because it can get out of balance. And I think it's important for all of us, especially as you age, as your children age, to recognize that. And so I think some sort of productivity management system, everybody uses something different, but if you're not using something, then you're probably just, letting the day run you, right? And you're being reactive, like you said. And so I think just something that can help somebody be more intentful and creative. I'm not creative, proactive for themselves and productive.
I'm a little older than you, and I'm not sure where you are, if you've had this sort of moment of awareness, but I was talking to a client of mine, known for a long time. He's the same age as me. And I asked him, I said, what is your ratio between discipline compounding and neglect compounding? And he didn't quite know what I meant. And I said, well, I can work out for 3 weeks, 3 weeks of discipline, and that can all be undone from 1 week of neglect. Like I'm back to square one. So that's my ratio. I was trying to get him to just be aware of it. And the point was, I said, I want you to treat something you schedule for yourself with the same level of importance as you do a client or prospective client meeting. You know how those will be in a different color, so advisor's got a meeting tomorrow with a prospective client that's been introduced, and that might be in bright green, and then he might have something in yellow scheduled for himself. And I said, no, they're of the same importance. I would argue that the one you're doing for yourself to meditate or do something for yourself, to work on yourself or on your business, that's arguably more important because it fuels the other. It's just an interesting stage in our lives to even just be able to think like this, in my opinion.
Yeah, I think it's really cool that it's trendy, right? People being more aware of themselves. There's a lot, I think part of that's probably also the proliferation of things like this, podcasts, where you can literally get great expert advice for free, from the best minds in the world, whether it's health, wealth, you name it, whatever the topic is, it's out there. So, over the last 4 or 5 days, I spent a lot of time on Audible, Blinkist, listening to, concepts within books or listening to books. I had a chance to travel for a conference last week. And so I was on the road probably 8 hours plus, besides being on the phone, I was listening to a lot of knowledge and podcasts and learning or trying to learn, And so I think that's been great. I'm a big podcast listener, watcher, but there's so much stuff out there now. It's almost overwhelming. So I think we also then, especially for me, I think I need to make sure that I've got time away from my mobile device. And so I'm not so attached to it because I've been working remotely. I could go to the office more lately, but I've been working remotely for years. And so, if I'm doing a lot of my meetings on my phone, for example, I'm just becoming more aware of that. That's probably healthier for me to be using my computer more often and not just so attached to my mobile, even if it is for work. It's a great excuse for a lot of us that are attached to our mobiles because it's so addicting, but I think it's good for all of us to think that through. And then, there's Dr. Peter Attia that does a very popular health podcast, right? The Drive. And he talks about these books that he loves that he always buys and hands out to his close friends. And one of the books is called The Die with Zero.
Right.
So, listen to the book. I went to a podcast that the author was on, and it was fascinating, and then, of course, as financial advisors, we don't want clients to die with zero. We don't want to die with zero. But the idea was you can't wait to live. And it's so sad to always hear the stories of somebody working very hard, not taking much time for themselves throughout their working lives. And then they finally retire. And then within their first 12 months, they die of something, and the spouse is left behind alone. And so I think the idea of understanding and being more present, right? And you can't get the time back. That's why I go back to time. And what can you do with that time? What's that worth to you? And what's most important to you in your life about that time? So I think that's a good awareness. I'm happy that there are so many different ways that people can engage these days, including professional classes and just so many people out there. I would also say do a little research on who the coaches are and make sure that it's not somebody that was trained 6 months ago about how to give you life coaching and they're not so good themselves.
Well, you could probably go to AI for that level of coaching, right? It's funny you ask AI. Yeah.
I mean, on AI, I know you talk a lot about it, Duncan, but I've for the last week in preparation for a talk I did at this conference, as well as for our own work, I fed some things into ChatGPT. It was unbelievable. I'm talking about like documents that I can use in work. I'm talking about rewriting different things for marketing. Our CIO, Jim, Jim has created, I believe, 9 bot characters, given them all names. So he subscribes to all of them, all the LLM models, the Chat GPT 4.0 or whatever, Grok, DeepSeek. There's a few others, that Gemini, but a few others that I've even heard of that he subscribes to. And he uses these AI bots to do research, to actually criticize each other, to research. It's fascinating. We'll see, that on the panel that was about AI a little bit. and about making sure that you can trust the information coming from a lot of the research from AI. But from what I understand, things are moving so fast that, even, and you can talk about this a lot better than I can. It's just getting so much better that the information's getting so much cleaner.
It's
But
awesome. There's no doubt about it. But even the simple
Yeah, we're
stuff,
gonna
like
make
I didn't play pickleball for a while, and I had a game scheduled with some guys that are a little better than me. So I'm like, okay, do I go watch some YouTube videos? I mean, I could go probably hire a coach and hit balls with and work on it. I went on a chat and said, look, I'm about to play pickleball with guys that are a little better than me. What are some of the things fundamentally that I should be mindful of? It gave me 5 things. I knew them all, but they were dormant in the back of my mind. But I was mindful of them when I was playing. I played pretty well, like very simple stuff. But there's just so much noise. You got to tune that out and focus on what matters. I do want to also say this. With all this sort of thought leadership and information that's available to us, I was reminded of a mentor who a long time ago said to me, he said, there is a profound difference between being self-conscious and being conscious of self. Okay, so the premise, what I took from that is you are worthy, like honor your doubts, but you are worthy of success, but you must attract it. Now, I wanted to ask you a question on this because I'm assuming that one of the benefits of being a serious student and understanding the law of attraction is you have a pretty substantial profile. You're on Fox, CNBC, Bloomberg. I mean, the list goes on. But you never seem like you just sort of show up for those interactions. You seem like you're at the top of your game every time you have those conversations. So from a preparation, but from a Zen energy perspective. So I'm sure all those investments that you're going through with the Audible and the podcasts are just keeping you fresh. The clay is soft. You're present when you go into those interactions for that profile. Is that safe to say?
Yeah, let me be completely transparent with you. I mean, I've been doing media for, I think, going on 14 years, maybe even longer than that. And we do have a PR firm that I've used the entire time that's helped us get some of those interviews. But I go back and look at some of those interviews from just only 5 years or 10 years ago, and that's not who I am. You know me, Duncan. I mean, I am on the investment committee as the owner of the RIA and having all the liability. I am extremely concerned about how our investments perform and trading and everything. But I'm not Jim, our CIO, or Tally, our chief market strategist, or some of the other members of the investment committee that are technical experts analyzing, valuations of companies, et cetera, et cetera. So back in the day when I was first starting to do those interviews, and I was pretending like a CFA, and I'm not, that's not where I was comfortable. In the last few years, I think is where I've gotten much more comfortable as more of a market strategist, because I am paying attention all the time. I'm very active on our committee. I think one of the unique abilities I have is that I've been involved in and listened to so many presentations from asset managers over the years. I've been a registered principal since the 90s that, I think I can kind of fish out the ones that I'm a little bit more concerned about that I don't think, deserve placement in our client portfolios, or even proprietary investment ideas that we have for our own models. I think I have a little bit of intuition, and I'm a believer that while, the investment portfolio is extremely important, for giving our clients institutional quality type portfolio, which is, conflict free. So you've got choice. You can select different strategies or products or whatever, and you're not limited. And you can add in things that maybe higher net worth clients might want in their portfolio to reduce risk, maybe enhance returns, such as some alternative asset classes. And you know how to add those into your portfolio to do that and optimize. Then to me, it's a commodity, and after that, it's all about helping the client manage themselves, right? And so I just think that when it comes to the media exposure and marketing ourselves, yes, our clients of ours very interested in making sure that we're on top of their portfolios and there's somebody watching it every single day. Of course, they're concerned about that. But really, at the end of the day, does a financial advisor ever go to their client, unless you're a hedge fund manager, and say, hey, look, I've outperformed SP 500 or whatever benchmark you want to use for the client over the last 3 years. We outperformed by 2% a year. I'm going to increase your fee. No, that's typically not the conversation that is happening with us and our clients. And usually, even with poor performance, advisors don't get fired as long as they're, returning phone calls and their service is okay and they've got a reason, right? Especially these days, you have to make sure that you're comparing, performance to the right benchmarks. If you're trying to compete against S&P 500, well, really, you're trying to compete against a very tech-heavy, the biggest market cap companies out there portfolio. It's not really a diversified across different sectors type portfolio anymore, right? So clients need to understand that. So that being said, I think that the alpha or all the values around everything else, if we can get our clients to really understand what's important to them with their money, ask them questions that they haven't, really thought about for a while or don't want to think about. And I found that to be the case with our wealthiest clients. A lot of them have messed up family lives with children that are in different directions that they don't really want them to be in. And they're concerned about things about family governance and about how they're going to manage the wealth if something were to happen to them. But they don't really like to talk about it because it creates conflict for them, right? And it creates stress to talk about it. But I think that's where we add value. So if you can be, an artist in helping a client, identify what's really important to them about those types of things, get them to talk about it. And then most importantly, I believe, be the catalyst to help those clients get things implemented. I think then we're very valuable. And, that's why I'm so bullish about the financial advisor business. And I think that we're in one of these unique industries where, financial advisors have the ability to earn very good incomes and also do a lot of social good. So I don't know if that was even part of any of the question you asked. It's been so long ago. I'm ranting now, but as you can tell, I'm passionate about our business and being a financial advisor.
A person can always tell when they're in the presence of somebody who has a deep sense of purpose. It's hard to put your finger on specifically, but you can feel it, and I definitely feel it here. I did want to ask, okay, so there was probably a time, I'm not sure when, where you were just a single advisor with 123 clients running your little business. And now you're a CEO. You still have clients, but now you're a CEO with 123 advisors adopting and drafting in behind your efficiencies and uniqueness. I'm sure in between that, you building out the C-suite and adding the talent that you have has enabled you to keep growing. But what has this done for you personally? Did it liberate you to be that next version of Jimmy just because you didn't have to follow, focus on the minutia and micromanage things? You just sort of let them do their thing and you move in your direction. Is that what happened?
A little bit. I think it's just been evolvement over the years. I've been in this business a long time. I've failed so many times, Duncan. I've made so many mistakes. I've wasted so much money, but that's part of the story, right? And so I read the books back then that said, if you fail a lot, it's okay. Then that's when the successes might happen. And I've had some very big challenges professionally in our business over the years too, but we've overcome all of that. And I would say that what I've learned from all of this is just always trying to do what's right. I think that's an important lesson for all of us, and always doing what's right for your clients, for your employees, team members, for the people that you surround yourself with. And I also think it's really important to surround yourself with quality people. So I think Jim Rohn's the one that says you become the average of the 5 people that you spend the most time with, right? I think he was the one that said that. But, a lot of other people said that too. It's very important what our surroundings are, what our environment looks like, even physically, I believe, but especially around the people, and if you identify in both your professional and personal lives, what are the sales in your life? What makes life easier? What allows you to do business quicker, faster, better? What gives you energy versus the anchors? What's holding you back? Who's holding you back? Where are the conflicts? And if you can identify those and try to eliminate the anchors as much as you can and invest time, resources on the sales or into sales. And then with people, a lot of us that are CEOs or founders want to be the boss, and we're afraid to put people that are smarter, better than us around us. And as we all know, we're all better off by putting, people around us that are way smarter and better at things that we're not, right? Around us. And if we can do that, then hopefully then we can have a successful business. And so I think that all those concepts that are in the business books that we all know about, it's not a secret. There's no business coach or life coach or spiritual coach that's come up with something that's not, not what that wasn't taught 50 years ago, 100 years ago, right? But what I've discovered is always the most difficult. And I think a lot of people, financial advisors and people in general, can resonate with that, right? It's not always easy. So it's about changing habits. It's about doing the things we talked about earlier. What can we do to be more disciplined and change the things that we need to change in order to be better?
Yes. And you mentioned Jim Rohn. One of the most powerful, indelible lessons I took from him was that in business, he said, like, swing for the fences. But he said, it's not how much you make or how much you're worth, how much you earn that makes you valuable. It's who you become. Who you become is more important than what you get. And right around that same time, Jimmy, I did some reading on this whole Zen mindset. And my takeaway there was that the essence of Zen is that you could live to be 100, or it could all be over tomorrow. So live your life accordingly. So on one side, you've got this die with zero. Give yourself permission to enjoy your life. On the other side, I mean, you might live a long life, have some resources, have some discipline, have some routine. That just brings us back to balance, that sweet spot. But, you talk about failing, and I talk to a lot of my clients about some of their setbacks. I love asking this question. Tell me about your biggest setback, your biggest adversity, and how you addressed it, how you dealt with it. Had some unbelievable conversations with that. But getting back to the whole premise of who you become, I love it when somebody says, the one thing I'm most proud of when I had a setback is I was able to contain it and minimize the collateral damage so it didn't affect many other people. I was able to contain that, if it was a business setback especially, which again just brings us back to the whole concept of purpose and our reason for being. So I know you take all of that seriously.
I do. And if you want me to talk about it, I will share with you. I think I don't know about setback, but it was one of the biggest challenges in my professional life, probably the biggest challenge. And when we set up the RIA, when I say we, it was myself and our team in October of 2014. So some of this stuff actually you could Google or ChatGPT it, and it's out in the industry media a little bit. But when we did that, what my life looked like previous to having our own RIA at the end of 14 and associating myself on the broker-dealer side with LPL, who's been a tremendous partner over the years for us. I owned a franchise of an independent, OSJ type firm associated with an insurance company owned BD. And that's kind of how I started my career. So I started my career with Mass Mutual, a great company, as an independent financial advisor from day one. I was self-employed, and just out of college. And after getting the securities test done and insurance test done, I was self-employed. And then fortunately for me, going back those years, a few years later, I had an opportunity to become the investment specialist for that branch here in Las Vegas. And that gentleman gave me that opportunity. So then I, became a registered principal. I, learned about investments much faster because I was involved in given so much training to be a registered principal and just not just supervise, but also I was compensated for increasing the sales of the securities products within that firm of the advisors that were there. So that's how I got into management. But when I ended up deciding that I needed a different platform for our clients, I bought a franchise that was based out of Phoenix with a similar company like Mass Mutual, different company. I won't even mention their name. Good company, been around a long time and all that. They were a subsidiary of another big, huge company. And, even though that I owned the business as an independent franchisor and I owned my own independent practice, when that company decided they wanted to get rid of that whole channel, I had to leave. And when we left to do what we did, about 30 or so individuals followed, and we had four or five branch offices, I think 5 branch offices affiliated with that across the Southwest. And when that happened, I got into a nasty legal battle. It was actually my advisor, my attorney here in Las Vegas, who was a client of mine, a high profile litigation guy, told me that I should file first. But anyway, bottom line is that we got in this legal tussle. And of course, they went after me for soliciting advisors to come with me and so forth, which I did not. And anyway, after a couple of years, we all walked away. But boy, it cost me a fortune to defend myself. in the firm. And it was an incredible amount of stress. And the story I'll share is that a really close friend of mine who later on joined me, he has this very successful insurance company that had an RIA arm, and he joined me on the RIA side. But he called me one time, he was on the East Coast, and it was like 9 a.m. This is a few months into this deal. And he goes, "What are you doing?" And I told him I was still in bed. And he goes, "It's 9:30 or 9 a.m. And I go, "I know, I think I'm depressed." And so that day I kicked myself in the butt, and I'll never forget. I think I went to a Tom Hopkins sales seminar when I was like 24 or something like that. And I can't remember, Tom Hopkins always said, "Get off your butt," whatever the acronym was that basically said, "Get off your butt, get to work." And that's what I did. And it was very challenging, because I was in a legal battle for our independence and freedom with one of the largest one of the biggest companies in the world, you know? And when realizing that, I'm like, oh my gosh, what just happened? But the lesson is, Duncan, it was the right thing to do. It was a right decision for me, for the employees of my company, for the advisors that were affiliated with the firm. It was the right thing to do. It was the right thing for the marketplace. And I believe that's one of the reasons why we had a good, solid foundation to start out. And why I think you say when you come to our conferences, you see this energy of people that seem like they belong or want to be part of this community, even though they have their own businesses, is that we attract a lot of people that want to collaborate. We have a lot of female advisors that, as us men know, women have much higher EQs than we do. They listen better. Their egos are probably a little lower. They collaborate more. They love socializing, as we know, right? And so we attract a lot of female advisors that are high-performing female advisors to our firm. We have a very inclusive community, and we like to collaborate. We have a lot of very successful independent people. But I would also say that, it's a lot of nice people. I was listening to a podcast on M&A last night from an industry person who has a very popular podcast. And they're talking about M&A, and they said that, lately we've heard from firms that are doing these acquisitions about we have this no jerk rule. We don't want to have people join our firm that are jerks. And we've been saying that for a long time too. But that's true. And I think what happened is that in this company that we have today, we were able to really vet out who we wanted to have affiliate with us and also serve as clients of ours, those advisors. And we really want to have shared values, right? And the better alignment we have there, then the better service model we can provide them. And the more we help those advisors grow their businesses. And I'll tell you that advisors within our firm that grow the fastest are the ones that are using their services the most, our services the most. And we track that. So we track how often they touch us when it comes to asking us for help on whether it's financial planning stuff or whether it's, portfolio management or insurance or practice management. And I'm very grateful to you working with one of our guys, Andrew, that we've got the foundation of really, to me, an advisor transformation program that we're calling WCG Ascend with the support of Pareto Systems. So I don't know if it's okay, but if there are other firms like ours that could use some support in terms of helping your advisors implement best practices, you might want to give Duncan a ring on that. And because we're very excited, because we believe that's going to be the program that's going to help our advisors grow their businesses, aside from doing acquisitions themselves, but grow organically and do it in a way that's much better than the rest of the industry.
Well, thanks for that. I appreciate it. Your team's just a joy to work with. And by the way, I do appreciate your story about 2014 and the adversity. And you're right about the moral compass. I mean, it's a battle, it's a slug while you're going through it, but nice to come out of that and put it behind you, and gives you a different perspective, because I talk to a lot of people that they are so ambitious that sometimes they overreach, and it's the overreaching that gets them in trouble. Like they just extend themselves too much, but it was never intended to be at the expense of anybody. They just sort of bought into their enthusiasm and optimism, and they went a little bit too far, but it gives you a little bit more perspective going forward. I wanted to ask you this, because obviously you're growing and now more and more teams are becoming franchise ready and trying to scale up. And firms like yours are creating funds to set aside some capital to enable people to buy other firms, other advisors who are going to retire or whatever the case may be. But it's shocking to me how many firms, they've got the capital, but they've got no process. And I know you've embraced the concept of process. I mean, that's got to be a huge differentiator in terms of professional contrast, if I'm an advisor looking to sell my business, I want to make sure my clients are in good hands. Yeah, I want to have my liquidity event, but I also want to make sure my legacy is secure. That having your process in place has got to give you a competitive advantage, I'm assuming.
Well, I hope it will in the future. We have not done a lot of M&A at the firm level doing acquisitions, but it's something that's on our radar that's going to, start happening pretty soon here. And there's multiple reasons on why a platform like ours needs to provide an ability, to have capital to be able to do this, because number one, our advisors need a place to retire to, right? And some advisors actually that have done this recently that are attached to our firm are interested in not retiring. It's just that they want to monetize, or they don't want to go through the pain of implementing and change on their own. They want support. They want somebody that's already out there that's been doing it. Now, that being said, there are industry articles that are all over the place that talk about some of these firms that have been doing a lot of acquisitions that have not done the best job at integration. I've spoken to several friends of mine or new people that I've met that have sold their businesses to some of these platforms. And it's, like there was a gentleman that I spoke with just recently that said it's a third year and they haven't really done anything. They're just operating the same way that they did before. So it seems like there's a lot of these groups that are just doing it for the numbers and not, taking the time that needs to be spent on the integration piece to try to help make those businesses work better. And so actually there's a couple of advisors that have sold their businesses that I've talked to recently who are just walked away. And now it's a problem. Now it's a problem for the acquirer on what to do. And my guess would be is that they're going to lose a lot of the big clients that those advisors brought in on their own, without a really, good process for transition. So certainly as we do more M&A ourselves, that's going to be a big part of what we do. One of the advantages for us is, as you know, is that we try to recruit people that want to be independent to our firm and support them, but also, have a back office partner like us. So we already start out, I think, with a little bit of an advantage that we attract people to our firm that want some help or want some partnership. And so they're more open to us than somebody that just does not want any help whatsoever, right? And so I think there's a more cultural fit for when we do this. And then, I think it's going to be some advisors that are going to come kicking and screaming, even if they're open to it. Some advisors are going to be kicking and screaming to the best practices, and some are coming with their hands, raised, asking for help. And it really doesn't have anything to do with how big the practice is. We have a $4 million advisor that's recently joined our firm that has two hands up because the business has gotten complex. And there's a lot of business opportunity for that practice that he just cannot implement as the sole decision maker. And so that's really what was attractive about us to that individual, was to help him implement best practices throughout his firm and to really scale, because there's a really big marketing opportunity that the person has, even though they already have a big business. And so I think a lot of it's going to be, how do we decide to work with the advisor and help them implement the low-hanging fruit? What are the best ways, fastest ways to implement best practices for that independent advisor once they're open to whether they stay independent and just want help from us, or if when they want to sell their business someday and we actually own that business, and then we're going to be working with that advisor implementing those best practices. What are the things that we can implement right away that can really move the needle, and then try to, over time, help that business transition more into best practices? We've also found that the administrative professionals that surround these advisors are dying for this help. A lot of times they're on their own on an island trying to figure it out on their own, and, trying to create workflows and deciding what the best tech stack is for different, areas of the business. And anyway, so I think we can help in a lot of ways, and hopefully we are better at integrating some of these practices as we do this.
Well, and the bedside manner component is becoming much more appreciated than it might have been 3, 4, 5 years ago. But what's interesting is that more and more advisors are starting to realize that there is a sell and stay scenario where they can de-risk a little bit, because, concentration risk for a lot of advisors is real, because so much of their wealth, their own wealth, is tied up primarily in their business. But when you talk to that advisor who says, I'm not done, I want to work for another 5 to 10 years, I don't have a protege, I don't have a continuity and succession plan, I want to de-risk, but I also just want to be liberated. I want to get out of the weeds of the minutia. We take that advisor and plug them right into this very simple frame, and it's PSP, which is, okay, the right alignment of interest, the right fit. Like, this is the fit process. This is the criteria, is the philosophical fit, the strategic fit, and then the practical fit. The practical fit is the economics, but leave that to the end. Don't lead a conversation about collaboration, sell and stay with money. Park that. Focus on the philosophical. Like, how is this, do we have the same worldview, or is there going to be chemistry and synergy and, shared values, all of it. So philosophical. Strategic is, how does the client win? Like, how does this benefit to the client, where I could literally explain to them what's happening without it coming off like it's a transaction, like I'm selling you and I'm monetizing on you. Like, no, this is my business. You're part of my business, but I want to make sure what's in your best interest. So again, I'm oversimplifying, but start with the philosophical fit, then go to the strategic fit as it relates to the client, and then have it cascade to the economics, the practical side, because the numbers are getting quite substantial. But when that approach is taken to ensure the alignment is pure, generally good things happen. Anticlimax, seller's remorse, and all these other factors that we see happen, these people walking away, as you're saying, that is minimized. So, because I know you buy into that mindset.
I'd love to, if we can, I'd love to add a little bit on that process and then talk about enterprise value, if we can, just for a bit here. I think that, where there's a lot of alignment amongst successful financial advisors is, most of us, I think, 8 out of 10 of us would agree what the, service model should look like to help our clients, right? So depending on the segment of the client and how much net worth they've got, investable assets, I think we could say for those clients, most of us would agree what, a best practice model would look like for those types of people. Now, where the issues are, I believe, and there's a lot of disagreement amongst advisors, is how to get there. Meaning, my portfolio is better than your portfolio, or this or that. It's usually around money management. And because all the money is earned on the portfolio management, that seems to be where all the focus is. And like I said, I'll give like a crazy example. In my opinion, forget about the tax consequences, forget about the structure, forget about actually being able to do this. But I've always said, when I've talked to advisors about this issue, most of us that have been in the business a long time have been to like an American funds meeting, due diligence meeting back in the past. And, so a lot of us got to learn a lot about American funds. This is, I guess, a freebie advertisement for them, even though we don't really use them today. But they just came out with some ETFs, so maybe we will. But because of that, a lot of us know one of the oldest, or the oldest. Well, it's not the oldest, but one of the oldest mutual funds out there, Investment Company of America, been around, I think, since like 1934. I think MFS has the oldest mutual fund. But either way, even if it's that mutual fund, doesn't matter the company. It's just a growth in income, large cap blend mutual fund with great managers. There might be some global stocks in there or whatever. In my opinion, let's say there's like 120 positions in there. I think from an investment standpoint, for a stock-only portfolio, if you just own that one mutual fund, I bet you the client, their performance will be in the top quartile if they live a long enough time frame. So if they live 10, 20, 30, 40 years, I bet you that fund would deliver top quartile type performance relevant to other portfolios that look like it, large cap stocks, I guess. You know what I mean? And clients would be just fine with that. Okay. Clients would end up with top quartile performance, which would be great, which would get no financial advisor fired. Where we mess it up is we always try to do something fancy with it, or we believe we're Warren Buffett and we could time the markets, or we can call the markets. We just had, as you know, Nick Murray as a guest at our conference in Las Vegas this last spring. And for me, it was just an incredible event for me, partially because of him being there. Yeah. When I was a very young man, I was lucky when I got in this business to read Serious Money. And I realized, reading that book, what our job was supposed to be as an advisor, as more of an investment behavioral counselor than trying to be a stock picker. And then he followed that up in 1998. Well, that's when I read it, which was The Excellent Investment Advisor. And that's when I had reached out to Nick many years ago. That's when I was investment specialist at Mass Mutual. And I asked him if he would participate in 6 1-hour teleconference sessions, because we didn't have Zoom or, Teams back then, which he agreed to. And for my branch in Las Vegas, there's a handful of our advisors that participated in that over this 6 to 8 week period. It was phenomenal. And then this last winter, we were at one of our friends' house in Utah, and I'd woken up early, probably from an extra glass of wine that night before I shouldn't have drank. But I woke up early and I listened to a podcast. It was Josh Brown's podcast that he has for financial advisors, which I didn't even know he had one. But Nick Murray was on there. I think I was researching Nick Murray. And it was fascinating because Josh Brown said that during the financial crisis, the great financial crisis, GFC, that he was, I think, in the business as a broker maybe, and was going to be out of the business. And he went to some friend's office, an insurance-based advisor, he said, and the advisor gave him the book, Simple Inevitable Wealth from Nick Murray. He read it and he said he told his wife that we're back in business and he saved his career. So that's what he says. And so I found this old letter that Nick had sent me, Duncan, back in 98, agreeing to, do this teleconferencing with my old branch. I took a snapshot of that letter that I'd kept, and I sent Nick an email. I was inspired by this podcast he had done. And, I knew that he, for some reason, he always talks about not for some reason, he always talks about his wife, Joan. And she's always been very influential in the way he runs his business. And, Nick Murray is one of those people, either you hate him or some people think he's obnoxious or whatever, or you love him. And I love the guy. I just think he's the most consequential financial advisor ever in terms of what he talks about for us, is what our role is. And it was awesome because at that time, it was that week where we had incredible market volatility in April, and we're all here in Vegas, a lot of people here. And Nick was on stage. I had the opportunity to do the Q&A with him. And the messaging was just so good. And one of the quotes in his books is that he talks about the timelessness of truth, which is so amazing. And, what he wrote back then, 25, 30 years ago, is still the same today. And what our jobs are as financial advisors, or what we should be doing and focused on, is so different than what a lot of advisors don't focus on. And to be quite frank with you, as you know, a lot of advisors that lead with performance are not the ones that have the most A.
No.
They are not the ones. They're the ones that have a lot lower A. They're focused on the wrong things. And the best entrepreneurs that get client relationships are the ones that have the biggest businesses, and the ones that are better business owners have the biggest businesses, right, in teams. And so going back to Nick Murray, it's a great opportunity to listen to someone with that. To me, he's like, I revere that guy. So I just think he's been so influential, and I was so lucky to read his stuff. And he's still writing. For those of you that might be listening to this podcast or watching, you should get back into his stuff. It's amazing. It's very relevant today. And so there's a promo for Nick. But having him at the conference was special, and just reiterated, the philosophy that I've had when I have an opportunity to work with advisors and coach them, which, by the way, gives me a lot of juice. I get a lot of energy talking to an advisor that has no production. They don't have to be a big advisor about implementing best practices. I just love working with people that want help and that are looking for help. And if we can help them, then I think that we have an opportunity there to do a good job for them.
Well, especially the ones that want help, but they want help to help themselves. Like they're not looking for pixie dust or a magic wand. They actually want to get to work, but they just want direction. They want navigation. Yeah. It's interesting, Jimmy. Before I was full on coaching and consulting in financial services, I had a couple of friends who were early financial advisors, and they told me about an event they went to with a speaker named Nick Murray, and how it just hit them completely differently because he was talking about behavior management and the signal to noise ratio with clients and the other information that's competing for their attention and your role and responsibility there, not just the investments that you're selecting. That was my first introduction to that premise before I even became a full-time coach and consultant. So yeah, the guy's a legend for sure.
And the bottom line concept on that is, we as advisors, going back to Pareto concepts, we spend so much time on the wrong stuff. We spend time on things that we can't control, the economy, the markets, instead of spending time on things that we can control. And so, I just think that people like Nick, yourself, you guys, talk about this and coach us on these things. But the challenge is, even with the knowledge, Duncan, it's been very difficult to implement that. and that's why I think, the Wealth Consulting Group exists to try to help advisors implement this better. And I'm hoping that the next phase of growth, we've got some big PR announcements of some leadership that's joining our group here coming out in the next few weeks. WCG 2.0 is going to be cooler. And, I'm going to hopefully surround myself with people that have had success in this business so I can learn from them and try to increase the value proposition so that we can actually build something truly unique. We don't want to just be like a lot of the other large firms out there that are aggregators that are just doing it, because they have PE investors that are trying to monetize, and everybody's just trying to monetize, and that's the only goal. That's really important.
Mm-hmm.
But that you said the process is more important. And then in talking about maximizing enterprise value, you coach this, you talk about this all the time. What can we do as advisors to do that, right? Well, we need to develop processes that are more institutional than dependent on ourselves, right? A big part of that is the portfolio management side. I know that when you coach advisors, one of the first things your coaches tell them to do, if they haven't done this before, is segment their book of business and then get rid of a whole bunch of people, right? And then outsource that money management side so that it shouldn't be a core competency that most independent advisors are focused on. So I hope that we can attract more people like that and our firm can grow, but grow in a way that, become a much bigger platform, but do it in a way that still feels like a small family and more of a boutique type firm.
Well, so far so good. You're maintaining that.
Hi from the Pareto Systems team. We hope you're finding real value in today's episode. If this podcast speaks to where you want to take your business, you can explore our one-to-one or team coaching. Our latest reviews from advisors include highlights, such as tripling their GDC and building process-driven practices that are more referable and fulfilling. You can schedule a call with us at paretosystems.com and browse the latest reviews while you're there. Mention this podcast on your call, and we'll send you a complimentary copy of The Blue Square Method, Duncan MacPherson's latest book on building a business that runs with purpose. Enjoy the rest of the episode.
I do have to ask, because you're right, there is an art and science to being the advisor of the future. The science is the technical ability, the process, and the art is just the awareness that you're managing people and you're managing their emotions and expectations and how they process information. In the world of art, there's this day for night dynamic where you can look at a painting and you can't really tell if it was day or night. And I'm bringing this up because the painting behind you, I don't know if it was conscious or symbolic, because I can't tell if she is euphoric, screaming at the top of her lungs with excitement, or if she's overcome with anger or frustration. So it's actually quite a thought-provoking piece. Was that on purpose?
Not really. It's just something that I thought was neat, but it's not even a painting. It's actually a collage. And I'll give a promote to the artist who lives in the Philippines. His name is Virut, Virutp, for his last name. And you guys could Google him or ChatGPT him and find all his stuff. Phenomenal artist. Saw the painting hanging on a wall in a house, and we liked it, and so we decided to buy it. And it sits in my dining room now. But you're right; it's a little bit ambiguous as to if it's joy or pain. And if it's like Carrot Top, who lives here in Las Vegas, who I know, I've met before, or a female. But anyway, I wanted to have a backdrop that could compete with yours. I love your setup there. I need to get a better setup, so I do a lot of interviews. But as you know, as we kind of talk about maximizing enterprise value, going back to that subject, I'm not sure if I did a good job on that. I think if you think about it, what do you want when you think about like how you would get out of the business? And I say this to our advisors in what we're trying to create. When we're out of this business, if we get a chance to monetize at max value, I think in order to get there to maximize value of our independent businesses, the firm that you want to, or the advisor that you want to leave your business to is the one that you would actually want to have as the best advisor out there, what you can envision your practice growing to. So what's fun for us is we can work with our advisors to create that. What's the end state look like for the optimal advisory practice to where, if we have $10 million to let somebody invest for us, we want to build a firm where our investment committee is managing that money There's a CFP type individual at our firm that's doing financial planning on a proactive basis, very seamless. We don't have to ask for it. It's just being done for us. We have a very amazing digital experience. And when it comes to anything around money, I could go to my advisor and not get sent a bill in the mail for the conversation I want to have with that advisor, even if it's not something that the advisor is getting directly compensated for, like the portfolio. That's what we want to build. And we want to do it together with the advisors, at the same time, letting them be, fiercely independent and entrepreneurial, letting them grow and putting, fine touches on their business that make it authentic for who they are, right? But then how do we implement the best practices that we all know, that we agree to our best practices? And that's what the goal is for the future. And that's how I believe you maximize enterprise value. It's got to be something that's institutional. So if you are actually an advisor that's, very focused on the portfolio, you got to realize that once you're gone, that portfolio is going to go with you. And does that maximize enterprise value? I don't think so. What could be a better story to that is, if I die tomorrow, Mr. and Mrs. Client, your portfolio is going to get managed the exact same way it was the day before I died.
You remind me of a story about an advisor who sold his business, wanted to stay involved somewhat, but wanted to sort of ride off into the sunset, was having a tough time with messaging with his clients. So we worked out this positioning, and it was very simple. He said, a lot of my clients have been asking me, what does it look like when I'm not around, and when am I going to retire? And I love what I do, but I definitely need to get out in front of my own planning. So after extensive due diligence, I've selected this firm. They are acquiring my business. I'm going to be retained as a consultant, but I have to tell you, their approach is so thorough and so professional. From a planning perspective, it's panoramic and all-encompassing. I am becoming a client of this firm. I will stay involved from a consultative perspective and offer my guidance, assist with my clients wherever I can. But anyway, the credibility, and this was all bona fide. This wasn't forced. This is how he felt. But how he felt after he relayed that to his clients and transitioned, because I said to him, you're impacting your client relationships, you're impacting your legacy, but you're also impacting the acquirer, their own enterprise value, and what their business looks like in the next 5 to 10 years. It really galvanized the departing advisor's sense of purpose to get this right. It was so incredible, the feedback, the group hug with clients and wishing each other well, and hey, let's be becoming friends. It was so well done because of the preparation and the authenticity that went into the messaging, the positioning. So, everybody lives by the rules they set, but focus as much as on the qualitative and how things are interpreted as you do on the quantitative and getting the numbers right. If you take a full picture there, you're going to feel good about it. But Jimmy, and we could keep going here, but this is probably enough for today. Everybody, Jimmy Lee is an essential follow on LinkedIn. So if you're not already connected with him, he's very active there, especially just watching how he represents advisors in the media is quite impressive. And I think we can all learn from that. But is there anything else, Jimmy, in terms of a call to action people could find you if they want to pick your brain a bit?
Yeah, I'm on LinkedIn, Jimmy Lee. Our website is wealthcg for consultinggroup.com. I'm easy to find. I love talking to other advisors. Doesn't matter if you have a big book of business or not, or just getting started or thinking about getting started. I love talking to advisors. It gives me energy. And I truly am grateful to have you as a friend. And, one of the first things I learned about from you going through your coaching was, look, if you have a better business model or you're joining a better business model, go rebrand yourself right now with your existing clients. Or if you want to tweak something in your business right now, you don't have to make some major change to your business. But if you want to rebrand who you are, if you've been historically just, a portfolio manager or an investment counselor, but you want to rebrand yourself, whether you want to call it a personal CFO or a comprehensive wealth manager or whatever it is, you want to implement something new that you think provides better service or better value for your business, then do it now and have that communication today. So that's one of the things I learned from you early on And even, I forget, because even for me, even though that I've been able to build this firm and be the CEO of the firm, I didn't always do a great job of telling my own clients what we had done, all these people that we added to our team. And so I'm consistently rebanding my personal business to our clients all the time. I've had clients for 20, 30 years, some of them. And I think they're very happy that they've seen more resources. And, and us advisors that have been around a while, the client conversations are better when they've been through a lot of ups and downs in the markets with us. And they're not, sometimes they're calling us to invest money during a downturn. So maybe for younger advisors, it's not the same. But I think positioning yourself very early on, or repositioning yourself like right now, even if you've been somebody that's been trying to be somewhat of a market timer, you don't have to be that person anymore if you want to believe in something that usually is better. So just Thank you, Duncan, and keep doing what you do. It's great for our business. There's a lot of podcasts out there for advisors. We have one too, called The Bull of Wall Street. But I love yours, and keep doing what you do in impacting this industry. We need it.
Well, thanks a lot. And right back at you. But I'll also say, you remind me, like, one of the commonalities of our clients is the clay is soft. Like, we never want it more than they do. They work hard. They're self-motivated. They take guidance and advice. It's like anybody at a high level, an athlete, a performer of any kind. They're coachable. And you've always been very receptive. I get as much out of the conversations as you might. But I appreciate this. And this never feels like work. So thank you. So everybody, appreciate you listening in. Jimmy, appreciate your time, and we'll have you back soon.
Thanks, Duncan. Look forward to seeing you soon. Bye-bye.
Right on.
Thank you for listening to Always On with Duncan MacPherson, where our objective is to enable professionals to always be working on their business and on themselves. Want to learn more about Duncan and his team? Visit ParetoSystems.com. Don't forget to click the follow button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the hosts and/or guests, and does not necessarily represent the views or opinions of Pareto Systems. The content has been made available for informational and educational purposes only.